You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call around these parts, the option block. A little bit of options analysis, a whole bunch of unusual activity. Got a little bit of an extra dose for you today, as well as some strategery. It's Thursday. It's strategery day. That means it's Uncle Mike Day, as well as, of course, all sorts of other fun stuff to dive into on the old program. Mix it in with, of course, peering into the future. And you have the delicious stew that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network. Quite a few programs for you guys to sink your teeth into while you're eating that delicious stew. We have many other flavors: goulash, chicken noodle, call them what you will. Many other flavors of soup over there on the old network. The easiest place to find all of it in one place, of course, the mothership, theoptionsinsider.com, the place from whence all of our content flows. Not just the radio. We do a lot of radio, but also a lot of great written content, articles, analysis, more unusual activity we have time to get to on the program like this, as well as education, all sorts of fun stuff, breaking news from the options market. Again, theoptionsinsider.com, your place to go for all that fun stuff, as well as, of course, to mainline our radio straight to your ear holes. And if that's not enough for you, you can also find us iTunes, TuneIn, Stitcher, iHeartRadio, Google Play, etc., and so on and so forth. All the main outlets, we're there. If there's some weird Czechoslovakian store you want us to be in, we're not in, let us know. We'll see if we can make an arrangement. And, of course, you can always find us via the mobile app, available for iOS, Android, and the beloved Fire OS. All right, and joining me on the old Option Block program today, let's go in order of proximity. Starting off in a little provincial hamlet we all know and love around here as St. Charles, Illinois, where we are joined by none other than Uncle Mike Tosaw himself from RCM Wealth Advisors, a.k.a. RCM Alts, a.k.a. RCM All Things. Uncle Mike, what's cooking in the land of RCM All Things these days?
Well, all things are cooking, of course. Happy to be here on the Strategery Thursday. It's always a fun day for me. And I'm excited about talking about the markets because we got a lot to talk about.
Yeah, some stuff actually popping off. But before we get to that, let's also have our other cohort join us from hither and yon, far afield. The one man using the old internet in that little duchy known as Maine, where we are joined by the rock lobster himself, Mr. Andrew Giovinazzi, by way of a little place called The Pit. Mr. G, welcome back to the program. How goes the bass fishing in between episodes?
You know what? I kind of missed my window there that day. So I haven't had an opportunity since. I got to do all this. I have to do all this working stuff with, with the meatball. So I missed it. I also missed my VIX prediction. It's not 13.5. It's 11.99.
Yeah, you were pretty south on VIX. I was leaning pretty south on VIX. Let's get right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block. This is indeed the portion of the program where we break down what is cooking, what was lighting it up this week and I should say today, from a trading and activity and options perspective. We are recording and indeed streaming live. I always forget to mention the live streaming there at the top of the show. We are indeed streaming live here on Thursday. Every Monday and Thursday, you can join us 3 p.m. Central, 4 p.m. Eastern via Mixlr, Mixlr. You can just grab the link whenever we tweet it out there in the old Twitterverse or via Facebook or on the website. If you've seen it before, if you grabbed it once, just bookmark it. The same link every time. You want to make your life really easy and know wherever we go online with these shows, just follow us via Mixlr and they'll notify you every time. It's available on pretty much every device you can imagine. You can put the Mixlr app on. And you can stream us there as well. Again, 9/22, so Thursday the 22nd here. That's for all of you folks playing along after the fact. And you're right, Mr. Rock Lobster. Bit of a VIX apocalypse in the works. Of course, earlier this week, we had Miss Yellen and her crew once again raising their heads up and causing a lot of confusion and delay, as you like to say, as well as Mr. Topham Hatt likes to say. And then at the end of the day, it was all really signifying nothing because once again, they sat on their hands. Go figure. And now, of course, here we are going into an election cycle where she'd have to be the bravest Fed chairwoman in history, or chairman for that matter, to go and raise into the teeth. I think their next meeting is a couple of days before the election. So I've yet to see a Fed chairman make that bold of a decision. If she does, maybe I'll give her a few points for flying in the face of convention. But you're right; it has been markets have been rallying, and we're seeing a VIX apocalypse as a result. That little bit of juice that Miss Yellen and her crew put into the balloon on Wednesday all popped as a result. We were debating on the show earlier, and that's what Mr. Rocklauser was alluding to. Some people in the live stream were giving you a hard time, Mr. Rocklauser, about saying, I think you're saying about 13.5 in VIX cash. As we're speaking, the markets are up about 0.5%, a little bit more in the case of the S&P, a lot more in the case of the Qs. And the VIX cash off right about 11.88 or so right now, off about a handle and a half or so out there. And you were saying 13.5, Mr. Rocklauser. I was fading it quite a bit more actually on vol views. I went to 11.75, which actually, if we froze right now, would be perfect. I would be the clear winner. So I was even more aggressive than you on the downside. Let's see if we can stay here. Of course, a whole nother day has to transpire, and we all know what can happen in that time frame. But still, a lot of people have been fading VIX, and I think some of our listeners giving you a hard time, notwithstanding Mr. Rock Lobster. I was on your side, if not far more dire, when it came to selling VIX this week.
It's certainly it was good for most of a lot of our clients at Option Pit. And what's amazing is I believe she said, okay, well, we got this December and then we'll do something in 2017. And it kind of sounds like there's going to be some rate rises, and stocks took it in stride. The Bank of Japan trying to hold to some sort of interest rate targeting, which sounds like there's less QE. You have ECB less QE sounding, and we rally. So I guess somehow, in some crazy way, the markets have totally been able to ignore the whole rate shenanigans, and now all of a sudden we have vol getting totally destroyed again. Like somehow, some way, the Fed has managed to take all the volatility and slurp it right out of the market. And unless there is some sort of funky rate shift thing, I don't know when we're going to see more vol. It's really weird. I guess the election, maybe that could be it. But I don't see what kind of data is going to come around unless there's a massive spike in inflation or something like that's going to freak people out. So I am quite amazed. But they slurped all the vol out. It is gone. That Slurpee is empty. The VIX Slurpee machine is now empty.
I like that notion, the VIX Slurpee machine. I can just see a nice 24-hour store where you can go in, get yourself a little bit of VIX Slurpee, and wonder what flavors that comes in. It comes in 1 month, 2 month, weekly, all sorts of fun flavors out there.
Exactly.
The VIX. I wonder which is more flavorful. I can see the 2 month, for whatever reason, being a little bit of tangerine. I don't know why, but there we go. So send us your flavors for the VIX weekly and monthly Slurpee. I'm going to make a note of that. That might be a fun title, VIX Slurpees. But of course, a lot of other things kicking off. Uncle Mike, what's been catching your eye in this post-Fed rally-ho VIX apocalypse palooza week here?
Well, see, I have more faith in our nation's politicians than Andrew does. We have the Trump-Hillary debate coming up on Monday, and I think the Slurpee machine's there's the way that with those two on the national stage and the same camera, I'm convinced they're going to cause some type of uncertainty or something between one of the two of them. So I think we're going to see a little bit higher of a VIX next week because of the presidential debate. I have faith in our politicians for causing chaos, and I think that I think they can do it. By gosh, so I think that that's one thing that'll happen. The other thing in terms of what's catching my eye, Apple kind of stalled out a little bit after their ginormous rally that they've had recently. Gold's getting a little bit of a pop. But the main thing that has really caught my eye today is the technical levels of the S&P. If you look at it, we are right back to what could be considered a pretty stiff point of resistance starting in August. Pretty much we're at the numbers where we're at the bottom of the range with which we started in August based on today's close. And so we came out of that range we came out of that range on the 9th of September, and then we've kind of created another new lower range, but now we're at the top of the new lower range, and I think tomorrow could be a key day because we've had two up days. We have had the Fed saying whatever the heck they said on yesterday, and that we might do it later this year, but we might go till 2017. So basically, I don't think we're going to raise any rates this year. That's the message that I got from it. So that has propelled us to the point of technical resistance. Now, can we break through this point of technical resistance with a presidential debate looming on Monday? And that's something that my answer would be, I don't know. Now, with that being said, if we do break through, if we have an update tomorrow, and then if we continue to rally through Tuesday, then I think that's a very bullish sign, quite frankly. And the next point of resistance would be 2,200 on the S&P. Now, with the NASDAQ touching all-time highs today, I don't know if it actually closed above the all-time highs. I have to look on my other screen again. But with all that happening, we're at a point now where we kind of dangled around the 2050 mark for a long time a year ago. Now we're kind of dangling around the 2100, 2150 mark. If we can get through this, then we have all-time highs again and no point of resistance. But right now we do have quite a big point of resistance. We do have a presidential debate, and we do have uncertainty along those lines, and we have earnings coming up. So I don't think that there's a lot going on right now, but I do see some things happening in the near future, and I think we could get a little bit of a pop in the VIX if some nice, good confusion and delay happens.
Interesting. A little bit of a vol buyer out there. You know, the debate angle hasn't really been put out there too aggressively. I think maybe people are just so inured to Trump saying somewhat off the wall things and Hillary passing out here and there. So maybe people have already discounted all of that into the market as we speak. But you're right, there is opportunity with these two candidates in particular. It might have been a little bit crazier if it was, let's say, Trump versus Sanders, where it would have been, all sorts of polar opposites and extremes on the table. These two are a little bit more known quantities, and they're not as diametrically opposed as those other two would have been. So maybe the fireworks will be a little bit muted, but we'll see. The debate is certainly one of the few things on the horizon. You're right, that can really inject any sort of boost. Speaking of boost, you mentioned, of course, Apple, and it was a good day to be loving yourself some tech. Nasdaq Composite hitting all new intraday highs here, passing past 53.41. Actually got up to 53.41.82. I believe that was the high. I'll have to check again. Myself, Uncle Mike, I don't have my NASDAQ up here, but yeah, it was flirting with intraday highs throughout the day, even though your good old friend, the fruit company is actually up about a percent or so as well. So continuing that rally in all things fruit company love here, even though perhaps not quite as strong, not quite as robust as we've been seeing in some other weeks as well. But yeah, that'll be interesting, I think, to go back and look and see exactly how the debate impacts us going forward. Speaking of going forward, I think I mentioned earlier at the top of the show, we do have an extra little nugget to discuss in the old odd blocks. Maybe we'll dive into that right now, because I think it's always fun to see what some of our past recipients, honorees, victims, call them what you will, are up to. So without further ado, this one actually is a pretty recent one. Just talked about them on Monday. So without further ado, let's dive right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time for the Odd Block, the portion of the show where we break down what was catching our eye, what was going on, and some of the weirder, more wonderful, sometimes the more whimsical, sometimes the darker and more mysterious and dangerous side of the old options market. Going to kick things off, actually, like I said, looking back a little bit, not too far though, just a few days. As you guys may recall, on Monday's episode, we profiled a little bit of calls in stock in a little name called Etsy. Maybe if you're of the crafty type, you're familiar with Etsy, you like a little bit of woodwork, a little bit of felt. Maybe that's your game, making marionettes, whatever the case may be. Etsy is the place for all you crafty folk. And closing today, ticker symbol, of course, ETSY, closing today, $14.81, up pretty strongly, up about 1.8%. But on Monday, this name was trading about a little less than 13.5, about 13.42. And what we profiled was someone coming in doing some pretty sized calls in stock over there on the NOV 15 line. It was, in particular, paper blasting out 5,000 in pretty much one block over there on the Amex of the NOV 15s for 70 cents, and doing that against some stock, about 175,000 shares. So pretty close to delta neutral there, doing that stock for 13.62. Now, like I mentioned, the stock gapped up hard pretty much immediately. The subsequent session, this thing was off to the races. And what we had here was the stock gapping up all the way, hitting 15 even before retreating a little bit today to about 14.81 net on the day. Still a net rally on the day, but giving up those highs. So this trade was pretty much looking good on the stock side, but kind of in his face on the options side almost instantly, which is kind of interesting. Always fun to profile these here a little bit. And of course, checking today, the open interest is still there. So our friend here is still open. And no, not surprisingly, he hasn't wanted to go after these. These calls gapped up on the height to about, the highs were about $1.37. So those were substantially in his face. They're a little bit less in his face right now. They're $1.15. Actually, that's ticked up as the day finished up. They were $1.15 at $1.25. They ticked up to $1.25 at $1.35. So they're actually a little bit about a dime more in his face. As of when we put this up this morning, or actually this afternoon, he was out about 275 on the calls. That's a little bit more now. And best case, if he had liquidated his stock at the ultimate high, he was up less than 250, about 241,000 on the stock. Of course, with today's stock prices, he was only up about 212,000 on the stock. So clearly, he's still out some money. Clearly, he's also playing we're right around my strike, so this is obviously a point of max decay. Once we get rid of this little bit of initial pop, he's probably hoping these bad boys will settle back down, and his stock leg will more than make up for what happened here on the options leg. I know I can tell you one thing, Mr. Rock Lobster. I bet you our friend here is sure wishing he did these on a ratio, maybe a little bit more stock in his back pocket. What's your call here on this Etsy pretty much instantaneous in his face move?
Well, that's when I looked at this first. I saw the D's 15s were offered $1. I thought those looked cheap. They actually even traded 90 cents. The D's, so that would be a pretty cheap call spread to pick up. 20 cents for the call spread. So, the way it went up, it looked like it was some sort of delta neutral, or close to delta neutral. But obviously, if you just jump to the strike, you're not neutral anymore. You're short. So it's unless they got the most unreal execution prices ever, because normally, as a market maker, when somebody's trying to sell calls and buy stock, you're normally, they get the call sale would be kind of on the bid, which is sort of what it looked like. It would be very hard for them to get best price to buy calls and also to sell stock in a synthetic. So
isn't that how you do it every time? And that's how I do it. You know, that's just, can't you just expect best X every time? Easy for me to say.
Every time. So, you know, as I look at this, I just, and then the options really, and the thing is because the options went so offered afterward, that's why I thought it was more likely somebody added some liquidity to the market by selling calls. So, but be that as it may, the calls for 90 cents a DC were darn cheap. So it does look like this little Etsy thing is heating up somehow. I think there's a little, I don't know, somebody's got their hot glue gun warmed up, and maybe they're going to start, pasting some Etsy with it.
That's a lot of hot glue guns over there. I didn't see the news. Is there a takeover love here, or are people just loving themselves some felt and glue? You know,
I think they're loving themselves some felt and glue. It's one of those where, when things get kind of cheap, what's the market cap is down to $1 billion or something. It's like at 1.6 billion. It has a following, it has users, and a lot of those stocks, remember Facebook. Facebook came out of the gate, everybody's like $42 and we're going to hold on to it forever. And it traded $16 before it basically went straight to the moon to $130. So, I think some of these companies that have a lot of subscribers, they have a lot of eyeballs and users, they have some bumps and grinds trying to generate income from all of their eyeballs and traffic. And then, sometimes they figure it out, but 1.6 billion for the company is not, it's not a ton of money for somebody that might be looking for an internet property, so to speak.
There you go. Anything with internet has to have a B attached to it. Isn't that just kind of the rules? At least it was the rule back in the day. Maybe it's starting to apply again. We'll see if the Etsy love can continue. We'll see how our friend fares here as well. We'll keep an eye on him. He's kind of flirting at that little bit of max pain right now. He's hovering right at that strike. It touched it, and then it bounced back down. He was sweating that a little bit. When you break through that strike, that's when things start to get even more ugly, shall we say. If we can hover right here, right now, and he can hold out for a little while, he doesn't get that tap on the shoulder from the old risk manager, then it might end up working in his favor. He'll be popping some Tums between now and the next couple of weeks, but all in all, it may end up working out after this initial gap. We'll keep an eye on that one as we move on to our next name, our next victim, celebutante, call them what you will. This is Bank of America. I haven't checked on this one in a little while. Was a frequent offender for a while. Kind of backed off a little bit. Now back in the hot seat. Ticker symbol, of course, BAC, BAC. Closing today pretty much unched, $15.60. Not a heck of a lot going on. Underlying wise, this is the name that does about 320,000 contracts a day. Doing a little bit less than that today. Doing about 244,000. About 3-to-1 calls over puts. That should give you some inkling of where our attention was drawn. In particular, was a fairly sizable, looks like a pretty sizable call roll. One of our friends here deciding to get the heck out of the 15 halves, doing it with gusto. It started out the SEP, so expiring the 23rd here, so tomorrow, 15 half calls. Paper coming in, looks like dumping initially about 18, nearly 19,000 of those for 17 cents. Then looks like they're coming around and reestablishing a little bit about a month out in October, in particular the October expiring on the 21st, 16 calls and doing those for 29 cents, doing that about, like I said, about 19,000 times. As the day went on, the call palooza continued for a total of about 65,000 on the SEP leg, the SEP 15 halves, and a little bit less, so a bit of a ratio here on the OX, total of about 47,000 on the OX. Perhaps an indication that the SEPs didn't work out as much as he wanted. Usually when they do a little bit less, it's a sign that they probably have a little bit less of a bankroll to work with. Also, he's going up a little bit, so he's got to pay a little bit for this. That also will impact that a little bit. But still, interesting stuff. Looks like our friend here has not given up the ghost, though, by any means. He's loving himself some more of this good old BAC. Looking back at the last 6 months or so out here in good old back, this thing has kind of been vacillating around a little bit. Hit a high about 16 and a quarter or so back in just the end of last month, or not too long ago, and kind of gently drifting down to where it is now, right around a 15.5 level, pretty much ever since. So our friend here, though, apparently not looking to give up the ghost and willing to reestablish for some size at that 16 strike. Senior Rock Lobster, let's kick it off here with today's activity. And what's your take here on our friend, shall we say, doing some size here in Bank of America?
I think we're doing the big roll, the massive roll, but the momentum we had in bank stopped. So they just don't have those big dollars to roll. But I mean, it looks like somebody wants to roll 100,000 options, doesn't it? Because we have
someone loves his broker.
Yeah. Well, that's the thing. Why are they only rolling to October 21?
Because they want to do it again in a month. They love their broker.
Okay. I guess they just don't want to. I don't want to spend any more than 12 cents for the roll, which is, okay, I got that. But, geez Louise. So we're just going to call this, and maybe we should just do this as part of the show. We're just going to call this the Love Your Broker trade of the day. What do you think?
I like it. That means we got to get some crazy, rolling for a penny for size and stuff like that. And
I'll find some.
And rolling for a penny and only doing it like a half a strike or something, something absurd. Going out a week and up half a strike for a penny and doing that. Those are my favorite. Those are true love your broker. This guy could have some actual economic interest here. So he's not entirely love your broker, but he does indeed. He certainly is fond of his broker at the very least. There's a strong fondness, a deep friendship, shall we say.
Yes, this is a strong fondness for your broker.
His broker's like, why you want to roll the Jan? Don't you want to roll the Hock and then maybe do it again a couple more times? And he's like, that sounds like a great idea. Let's do that. Then the holidays at your house. Kind of thing. All right. So yeah, our friend here, he'll be playing again pretty soon, so we'll keep an eye on that one as well. I don't know, you guys out there playing in Bank of America, what do you think about him remaining optimistic here in BAC? You guys agree, disagree? Let us know. Hit us up as we move on into, let's see what we got here. Next name, this is, I believe a newcomer. I don't think we've discussed Encana Corp before. This is ticker symbol ECA. If you're not familiar with these guys, you got to have our token energy producer on the show. These are a Canadian-based energy producer doing exploring and development of natural gas, oil, all that fun stuff. Closing today, $9.50, also our resident cheapie on the day. Up about 15 cents or so on the day. It's a name that does about 3,100 contracts a day, so fairly decent paper for a cheapie. Today, doing about 17,000 contracts today, nearly 39 to 1 calls over puts. That should bring your attention to what certainly caught our attention today. And if you scroll on down through the options chain, you too can see it there. It's Jan 2017, the 10 calls lighting it up. Paper coming in, again, not as much size as we saw in Bank of America, but still a pretty decent size, buying about 12,000 of these Jan 2017 10 calls, doing it for an even buck as the day went on. Looks like about 3,000 or so more, total about 15,000 and change going up on this strike today. Looks like the ladders might have been for a little bit better price. They ticked off a little bit, 90 cents at 95. Going up in one big chunk, at least that initial kind of 12,000 over there on the SIBO with about 500,000 shares going up a little bit later. They can make our lives easier, Mr. Rocklass, put the stock and the options up together, but no, they have to separate it, make us go digging, make us actually work for a living. What fun is that? Looks like, again, they didn't lift the offer, but it was pretty close on the calls. So it looks like this was pretty much a straight up buy calls and sell stock. If that is indeed the case, and our friend here wants ECA to move pretty hard, it said it's hovering right around 9.5. This thing has been was trading lower, substantially lower earlier this year, trading right around the 6 handle back in early to mid-May. So this thing has rallied about 50% Since then, it peaked out back around 10.5, so about a buck higher. Not that long ago, actually, about 2.5 weeks ago or so. So this thing has been all over the place of late. So our friend here betting on that all over a place to continue and doing it for some size here out here in ECA. Mr. Rock Lobster, what's your case here for our friend? Are you jumping on board his ship, or are you harpooning it, perhaps torpedoing it instead?
I've seen a lot of these explorer and producer companies like Rig. We also saw, I think I wrote up a risk reversal. There's been a lot of really bullish paper in all of these stocks that are just kind of languishing. It's almost like, are we really going to go out and drill again? I think that's sort of where the stocks are trading. A lot of them have a backlog of business, depending on which one is. But, I'm seeing more and more like pretty sizable volume, stuff like this, where it's looking bullish on a delta neutral basis, but really looking for some money really to come back into these names. So I have a little classic bet. I've started acquiring some stuff in these as well, just selling some puts, even in Rig, just see if I could start to take some, deliver these. I pretty much figure we're still gonna need oil for at least another 20 years. So, I mean, at some point the demand will pick up, I guess. But there's more and more call buying in this stuff, and I think, I think it's gonna grow. That's all I'm gonna say. But as of right now, it's been it's still, unless you really kind of scoop the dead bottom, we really haven't seen a ton of go-go yet in these things.
So you think we'll all be using oil again and not just our Tesla wall-mounted battery packs to power everything? Isn't that the future,
I
sir?
like the idea of the Tesla wall-mounted battery pack. I think it's, it's bold, it's a big vision, and it needs a lot of government subsidies right now. So,
and the things they make tend to blow up sometimes, so maybe not the best thing you want to be hanging on your wall. At least not Tesla. I know, not the same company. Before you guys write in, all you Tesla devotees, let's move on here to another name. This was a frequent offender for a while. Haven't really checked back in with them, but they're on our radar again in a big way today with Pandora Media, of course, ticker symbol P, closing today a tick over $14, up about 2.5% today. This is the name that does nearly 12,000 contracts a day, doing a little bit more than that today, to the tune of about 47,000 contracts. About 6-to-1 calls over them their puts, and that's, of course, where our attention was drawn. Not in the SEP weeklies, not in the OP weeklies, or even the OP or NOV monthlies. No. A little bit farther out, past Dece, all the way to Jan. If you guys scroll down on your options chain, you'll see it jump off at you as well. It was a pretty sizable chunk, starting off with about 29,000 of the Jan 2017 14 calls going up. Looks like paper selling for about $1.45 as the day went on. Actually, it looks like about nearly 2,000 more trickling in for a total of about 31,000, a little bit less going up total on the day. That's on open interest of about 32,600. Fancy how that works out so closely. I also saw a block of stock going up with this. I guess calls and stock are the order of the day today. Senior Rock Lobster, we saw nearly 1 million shares, 858,000 shares going up at $13.88. So it looks like it's your old buy right, buy stock, sell the calls against it. If those shares and stock and options are right, then that's about roughly, I guess you can say, a little bit delta neutral here. Looks like both of them went up near the bid, which is kind of interesting in that scenario. But also the open interest is kind of interesting. Perhaps our friend here deciding to get the heck out of Dodge. We are exactly at his strike. 14.01 means we are exactly at that 14 strike. So perhaps our friend here got the move he was looking for and decided to get the heck out of Dodge. This thing has been kind of all over the place, gapping to about as high as about nearly $15. Again, just a couple of weeks ago, $14.98, so just a tick underneath it before drifting back down to about 14, where it is actually hit about $13.20 last week. So this thing has kind of been really volatile over the past couple of weeks. And back not that long ago, a few months ago, back in the early to mid-April timeframe, this thing was trading about $8 or so. So this thing has rallied substantially since then, over 50%. Maybe our friend here, Mr. Rock Lobster, gave himself some time for this trade to work out, and he decided, at his strike, it's kind of worked out. He's good with it. He's taking it off. Or do you think he's going to the dark side, doubling down? Why do 30,000 when you can do 60,000 for twice the price?
Why not low? I'm thinking they're closing. I've seen there was some volume in the 18. There's been, there's some upper volume in the January 2017 cycle. This Pandora is like another one. I think that could be another type of buyout candidate. Not a huge market cap, has a wide audience, hasn't quite figured out to monetize yet. Could be a target for somebody, but they still got that the just trying to get those dollars flowing in there, even though they have pretty wide user base. So it looks like this could be closing, but this is another one that has a kind of this sizable sort of calls and stock type of trade, where I don't know if they were buying the calls at some point, but it looks like just from the amount of deltas he sold that probably did okay, because the trade as priced was kind of long. If he sold out the calls and bought stock as an unwind, he would have been pretty long, after Pandora had this rally. So it could very well have done nicely for him. If you got into it like in mid-May, that's a pretty huge rally overall. So I'm thinking it's a close, but we'll see. But if we see that open interest doubling up tomorrow, then we'll know. We'll know if he didn't like 30, they're gonna like 60. see how it works at this strike.
It's that old governmental thinking. Why do one when you can do two for twice the price? All right, let's keep on rolling. It's Thursday, listeners. That means we take the chains off Uncle Mike and unleash him upon you, our unsuspecting listeners, because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. Welcome to the Strategy Block. Uncle Mike has been prepping all show long for this moment. He's slapping him in the face, getting psyched up. He's doing little wind sprints back and forth during the option block, during the odd block, I should say, getting himself charged up, getting a little bit of a sweat on. He's really ready to go, because it's time, listeners, for the Strategy Block, the portion of the show where Uncle Mike takes the reins. For about 20-odd minutes. I take a nice rest, which is nice. And he dispenses some options, wit, wisdom, hilarity, sometimes a smattering of outrage as well. Who knows what we're going to get? Which of those mixes, or perhaps all of the above, we'll get today. But I did before the show started, I did check in with my minions. They were wandering about to and fro as they wont to do, kind of listless today. Didn't seem like, I think we're low on the jams and jellies, so they were kind of a little bit, I think their blood sugar was a little bit low. But one of them was mentioning something about call spreads, and another one started to push him and hit him and said, no, put spreads. So I kind of got the feeling that maybe there's some sort of a versus angle here. On your strategy block, Uncle Mike, maybe call spreads versus put spreads. And I got the feeling that since they were pushing each other, it probably wasn't the light side, more the dark side. So I'm thinking maybe selling a call spread versus selling a put spread. Did I interpret their minionese correctly?
You did, and I apologize for the mixed message sent to him. I forgot, if I say the word versus to minions, it's like an automatic fight. I totally screwed
They
that
fight at
up.
the drop of the hat. If it's a Tuesday, they're fighting. It doesn't matter. Any day of the week.
Pretty much. So, all right. Call spreads versus put spreads, everybody. Oftentimes, I know the listeners to this show, we have vertical call spread sellers and vertical put spread sellers. What I want to go through today are just some of the facts that exist, or some of the things that exist within the actual product or within the actual options that you should be aware of when doing so. And I'll even share a little bit about how I like to overcome some of the downfalls and take advantage of some of the good things in them. Let's start by selling a vertical put spread. Right now, I'm just looking at my option chain on SPY. I'm 1 month out. I'm at the October 21st expiration. The taping of this show, SPY is a little bit over 217. And as I'm looking at these put options on here, I'm looking at the 215 put. That has a volatility of the mid-10s. I'm looking at the 213 put. That has an implied volatility kind of in the mid-11s. So as we go lower in strike prices on puts, implied volatility is going higher. And that's very typical. That happens. That's the skew that exists within option trading. So here's the reason that I'm bringing that up. Now, a quick review of selling a vertical put spread. You're selling a put option, sell to open a put option, and you're taking on the obligation to buy the stock at whatever the strike price is. So, for example, if I were to sell the 216 put on SPY, that means I'm obligating myself to buy 100 shares of SPY at 216 should SPY go below 216 and the person on the other side of the trade chooses to exercise his option. Now, let's say that I don't want to take on all $216 worth of risk. And if you're doing this with an actual one lot option, you're taking on $21,600 worth of risk, then you can buy another option to protect that. And let's say that I buy the 213 option, or the 213 put option, I should say, the same month, then I have $3 worth of risk instead of $216 worth of risk. Now, that's the good part. The bad part is the 213 put is not free. Now, here's the disadvantage that lies within selling a put spread. The disadvantage is that you're buying an option with higher implied volatility than the one with which you are selling. So with that being said, it makes it somewhat unfavorable to do from that aspect. Now, of course, meaning that theoretically, the option you're buying is more expensive than the option with which you are selling. Now, that's the disadvantage. The advantage, of course, is that you're taking all that risk off the table. You're taking off $213 of risk per share off the table by buying that put option. It's not free. So what are some ways with which you can do this to just kind of say, how can I overcome this? Well, the first way with which you can do this is to just simply not care. Because the bottom line is, if you're right on the trade, you will make money. And by right, meaning the market goes up, the market stays above 216, and the market goes your way, you are correct. You win. As much as Andrew is going to say, that was a trade where you bought some vol that's higher than the vol that you sold. Well, you can just laugh at him and say, well, I made money. Who cares? So now I'm looking at a 217 put on SPY, trading at 37 cents by 40 cents. It's a one-day option, so take it with a grain of salt. Right now, that has an implied volatility of 5.3. Wow, that's a ginormous amount of volatility. I don't know if we can possibly stand such excitement. But let's go out a little bit. Let's say that we go down to the 213 put. That has an implied volatility of 11.8. Now, with that, of course, that's over double the implied volatility. So just explain the put spread side of it. On the call spread side of it, this is one area to where, yes, you'll have to sell calls closer to the money typically to get any premium or the same side of what you would have for a put. But implied volatility, as you go higher, is one where it's not going to be quite the same in that, yes, you would be, if you're buying a call spread, you do have that type of a disadvantage. But with that, it's still there. So with that, why don't we just abbreviate that for today? And I will sign off on the put spread side of the strategy block, and perhaps we'll revisit calls on another date.
There we go, sir. A little bit truncated. Our minions are sad. We'll see if we can fix your connection with the Skype gods as we move on into a quick and abbreviated mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's see how many. We cram probably at least one or two on here. We did do our question of the week this week, and we asked you guys, going into the Fed, we asked you, where will the Fed close, or excuse me, where will the VIX close after the Fed decision on Wednesday? So we asked you essentially, where's VIX cash going to close on Wednesday the 21st. This is obviously already closed, so you can't go bet now because you know the answer now. But it closed right after the decision. We gave you between about 15.5 and 16.5, between 14.5 and 15.5 on the downside there, then below 14.5 and above 16.5. Mr. Rock Lobster, I know where you're picking, so I won't ask you where you picked, but what do you think won our poll?
I think everybody was too high, so I'm going to say the higher number of what you got there. What's your highest number?
Ours was above 16.5.
Yeah, above 6. I'm gonna say above 16.5.
Uncle Mike, do you concur? Can you hear me, sir? Can you hear me now?
I can hear you, and I have more faith in our audience. I think they nailed it. What was the one that was where we came down like we did?
Below 14.5.
I'm going to say that's that one. I have faith in our audience.
Oh, your faith is rewarded this time, sir. I think some people snuck in at the very last minute because I know above 16.5 was winning. It ended up coming in second place with about 31%, with some people scooting in, I think, there at the very last minute to dive into the below 14.5 once it was clear. Some of the craftier people, not the Etsy folks, the other kind of crafty in our audience there, scooping it down to so about 39% saying below 14.5, about 18% 14.5 to 15.5, and 12% is 15.5 to 16.5. So interesting. Our audience hitting it on the head this time. Let's see. We got time for a quick one here. Let's go to a bit of a weird one. This one came from Sean O. This other one's a little bit lengthier. We'll save that for Mail Block Monday. Sean O. asking, are there any options that had lopsided trading to one side, either puts or calls, leading into the Fed announcement? Interesting question there, sir. I haven't had a chance to parse a wide variety of names going back to Wednesday. Just pulling up here some VIX data here as we're talking. VIX always call heavy. Kind of curious how that broke down on that day. I don't know, Mr. Rock Lobster, you're always parsing different activity going on over there. Anything catch your eye that was extremely lopsided to one side or the other? Not after the announcement, but leading into the announcement itself.
Yeah, we saw it. Just there was a lot of put buying in the vol products. So that's it. They were kind of coming for him a little bit. And on the second side, there was a lot of upside call buying from, I think, the vol product administrators. So I think it was kind of one of those things where somebody had to hedge some extreme risk, but for the most part, there was just a lot of put buyers on the downside.
Well, that's noteworthy in and of itself because we mentioned that a few times on vol views lately. There has been more put love, particularly when VIX was vacillating down around the 11 handle, which it actually is again right now as we're speaking, or 12 handle right now, but still very low. We saw a lot of put love, put spreads, 14, 13 half, SEP, OC, etc. So not surprising. There was some other stuff. Of course, whenever you see size upside going up in VIX options, there's also other institutional things at work, rebalancing of products, large insurers have to play out there, all sorts of fun stuff. So a lot of other things perhaps driving the paper flow out there, but interesting stuff. It's a little bit of a different question than we normally get. Good one there, Sean O. I hope I'm saying that correctly. All right, let's keep on rolling into our final segment for the week. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. This is the portion of the show, like the man said, where we peer wistfully into the future, perhaps hopefully, looking for some action, some activity, a little bit of vol, a little bit of some fun trading back and forth, and all sorts of other good stuff. Let's start. I'm going to toss it once more, hopefully, optimistically, back to St. Charles, where hopefully the Skype gods are smiling upon Uncle Mike. Mr. Uncle Mike, what do you keep an eye on for the rest of this week into ye old weekend, sir?
Resistance, where we're at pretty much right now on the S&P, just seeing if we can break through that tomorrow. And then next week, watching the debate and seeing if we're going to continue to climb, see if we can make another run at 2,200 on the SPX.
Nice and succinct, sir. I like it. Well done. Your connection has been the soul of wit for you, sir. Brevity and connections, the soul of wit. All right. And then moving on to the other side of the country, where we are joined by crystal clear, let's call him crystal smooth, Mr. Rock Lobster. What are you watching, if anything, for the rest of this week into the weekend, sir?
We're watching the unreal contango in the VIX futures. I think the way it's pricing now, if VIX closes here, I think VXX might drop like 10 or 18% or something like that, like $3 or $4. So the product is continuing to do when it's crappy, it's crappy. And of course, I've got a couple little trades on that are crappy. Plus the fund that we manage is betting on a little crappy. Yeah, I think, we could see August all over again until the election. So I just say be mindful of that. The problem is, like Mike was saying, there's not really enough good news. All there is just no strange coming out of the Fed, but there's not enough really to get the bulls' juices flowing, so to speak. So we'll see. We kind of just have a tendency to go back to whatever those highs are and then sort of pull back. So I'd like to see if something could happen, but I think we're going to do it on relatively low vol, and I still think the Qs are what are going to be the performer for the year.
All right, everybody. That music means we've come to the end. We had another fun sojourn through the world of the option block. Some UA, some VIX apocalypse at the start of the show, some Fed will they, won't they dance that continues week after week, month after month, quarter after quarter. Of course, the looming specter of the debates and the election. We'll see how much vol this election actually generates, because unless it's a closely contested contest, I don't know how much this is really. I mean, obviously there is a structural source of volatility there, but exactly how much, I think Trump and his team probably have to pull a lot closer to make this a more volatile event, but we'll see. We got a little bit of time left, and as we all know, we don't know what the heck is happening, even sometimes the day of the election. Going back to Bush-Kerry, and all the Kerry supporters were trumpeting that they were winning in the early portion of that day. So even with exit polls on the day, we don't know what the heck is happening sometimes. So it's hard to prognosticate this far out. But before we wrap up, one last time, let me check back in with my cohorts, my partners in crime. Let's kick it over to RCM Alts / RCM Wealth Advisors. Uncle Mike, what is cooking in the land of all things going long?
Well, if you guys are interested in trading through our branch at TD Ameritrade, or trading through under our umbrella at TD Ameritrade and or Interactive Brokers and or Money Block, it does have a reduced commission, and we could provide advice for you, of course. There is a fee involved, but typically it works out better for a lot of people at those establishments. Feel free to give me a call. I am at 312-212-3531, or send me an email at mtosaw@rcmfs.com.
There you go, listeners. Hit him up if any one of those choices sounds palatable to you, or if you just want to hear his nice, pleasant voice, hopefully on a better connection than today, then hit him up. Uncle Mike would love to talk to you guys. He's a very, very happy, jovial fellow to talk to. Trust me. Just brighten up your day. Give him a call. All right. And on the other side of the spectrum, not quite as bright and jovial, but he might save you an eighth on the 10 lot here or there. Mr. Rock Lobster, what's cooking in the land of the pit, sir?
It's Maine in the summertime, although this is our first day of fall, so time to get the docks out of the water and boats go back and try to get ready to hunker down and get the ice rinks ready. But besides that, we will have a Saturday class next week on the weeklies and all of these things daily that are about to come out and just dailyfy us.
It is all things daily. The Mainers, do they say foliage or foliage? What's their preference up there?
I'm going to say foliage. We just call them leaf peepers.
Leaf peepers, yes. You're coming into peak season up there when everyone likes to tour through New England in the autumn. See the foliage, as some diehard New Englanders like to say. Check out what the Rock Lobster and the Greasy Meatball are cooking over there in the land of all things Option Pit. And on behalf of the Greasy Meat, on behalf of the Rock Lobster and Uncle Mike and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And, of course, for sending in such great questions. We'll get to more of them on Monday, don't you worry. And we'll see you then for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.